Hi, this is Ron Janish with andrewscourse.com, also known as precisiontrader.com. And what we are doing is a test. And you're going to see me do this test in kind of almost, well, real time pretty much. Meaning that even though it's a recording, we're going to record it once, and whatever I say is whatever I say, and whatever happens is whatever happens. So and what we're going to do is we're going to see how well the new Andrews pitchfork indicator, how it works, and we're going to see really focus on how it works in indices and other indices besides the SPX. We know what the results are in the SPX. You can see that on the web. But how well did it work in other things? And we're going to take a look at that. The first thing we're going to take a look at is the Russell. Okay, and how we're going to do that is a real easy kind of day by day thing. Let me see. Okay, where are we? Okay, so let me adjust my software. There we go. So we're back here 8.1. Let's see, we're back here, and this is 8, 17, 12. And what we have on these charts are basically some of the bigger numbers, and we eliminated the smaller numbers, and we'll get to the smaller numbers later. So right now, I just want to see if the bigger numbers are interesting. Okay, and let's fix this so I don't go up and down and back and forth all the time. Let's see. There we go. All right. Let's move this one over here. Let's move this one over here. And there we are. And this date here is 5/3/12. And let's see, where is 5/3/12? That's 13. Let's move this over. Whoa. Okay. Where are we? We're here. Here is 5/1/12. Okay. Which I guess is here. Okay. So let me just play along. Let's put a 3 up here. Whoop. Okay. And then we have a 3 over here. Three over there, and then the next number is over here, and that's a 3. Now remember, the numbers below are up we go, cheering the upside, and the numbers above are cheering to the downside, right? Cheering, bearish, bullish, call it whatever you like. Let's see. So here's a 7. Ooh, 7. I don't even publish those kind of numbers anymore. I only publish up to 3 or 4 rather. But very often I've seen on a day where I published a 3, it was really like a 5 or a 6. So you still have a good indication. Let's see, 3. Okay. 3. Let's move this up to here. Okay. So over here, we're saying this one's a 3. Okay. Now, just curious about something. Somebody suggested to me the other day that when you get a 3, prices typically go below the prior 3 weeks. Let's take a look at this. 18. Okay, so here's 1 week, 2 weeks, and this would be the 3rd week, so I guess it'd be getting into the 3rd week. Okay. All right. Take a look. Whoop. Let's see, what do we have here? Have a 3 here. Let's move this guy here. Oh, this one was nasty. Nice down move. Ooh. So we had a 5. Remember, these numbers that I put up here, they were kind of put up sparingly for demonstration purposes only. Not really the total number set. 5. Okay. Okay, now it gets interesting. Let's see. Okay, so we have a 3 here. Now, remember the theory that if anything 2 or stronger indicates a tendency to go up strongly, and what does that mean? That's a nice subjective term. Let's say it's gonna pretty much go for getting past the prior 2 weeks. So in other words, a 3, for example, would be a 3 is looking to get past the prior 3 weeks, which is that's above here. Okay, so that's what a 3 is out to do. And when you have cumulative values, like here you have 1, 1, 2, 1, yeah, they're close together, so you have a 5. So you're looking to go up above the last 5 weeks, and probably then some in this case. Look at this, nice up move. Let's see if we can just move some of these terms here to get things a little cleaned up. Ah, there we go. Okay, so looks like I have a 1 and a 3 here. Okay, so let's move the 1 and the 3 here. Let's say it's like the 1 is here. Okay, and the 1 says stall. 1, and then here's your 3. Yeah, there's your 3. Okay, and then you had a 1 down here and a 4 here, and then another 4 next to it. Right, that's what these little things are in here. Okay, and then you came down and you had a, looks like a 1 down here somewhere. I would think that was there. And then you had a, the heck? Let's clone. Let's remove. See if I can figure this stuff out better. Okay, there we go. Okay, 1, 1, and then we had a too early. Remember, too early is not the same as an end of day. Okay, but it what it means is, hey, look around and see what else you have. That would, if there's anything else that tells you to go short, because this could be a humdinger or a fizzle. Okay. Okay, so you had a 1 and a 2 over here, and a 1 here. Now the 1 here, remember this is indicating some kind of stall. Let's move this out of the way here. So over here you had the 1 indicating a stall, and we can see we had a nice little stall thing here, and kept getting the 1 and the 2, total of 3. Well, this one's going to pop up easily above the last 3 weeks, and boom. Okay, so here we have 1, 3 dot with a bunch of dots and a 2. Let's see. 1, 3, and then a 2. Okay. All right. So this would indicate as up we go a bit. This is suggesting actually ridiculously strong, and Russell didn't get ridiculously strong. That happens. Then over here you have a stall. Let's see where you have this stall. Okay. Okay, there's your stall. Then here's another one saying, hey, this is uptrend is going to stall, stall. Okay, and then down here you have a 3. Okay, and then you get a, okay, so you have a 1 here, and you get a 3 here, the downside, and it's like a 1 here, and we have an early 4 here. So it's definitely, this is definitely something that could work, in my opinion. Definitely very helpful in knowing when to draw the lines, because sometimes it's you have all these lines and stuff, and in Andrew's course, fortunately, you narrow it down a lot to only a few certain ones, but it's still a good idea. Let's see, was there anything up here? No, nothing perfectly up here. You did have a 1 here. Whoops. See? Caught this guy. A 1 there. Let's see what else we had. We had a 1 here. Okay. So if the premise is that when you have a 1, you're looking for a stall, and when you have a 2 or higher, preferably the higher the better, and that can be cumulative, you're looking for some strength in the indicated direction, I would say this is fairly useful. And so what you do is you use it in conjunction with the Andrews lines, and that should be pretty good. So let's save this chart. Capture image. Let's save it as okay. Okay, so let's do that, and let's look at something else. Let's look at Now we're going to look at NASDAQ. Hopefully I'll get this right. Yeah, it works. Okay. All right, we're looking at NASDAQ, and we're looking to do the same thing with the NASDAQ, right? So just for grins, let's see if there's any relevance there. Let's go back. Oops. Let's do this, and let's go back in time. Go to here. Okay. Remember, 5s are good for decent move. We can see that In this one, it tried to go down, but wasn't able to do that much. But did it finally go lower than the last 5 weeks? Yeah, eventually. That's why it seems to work really nicely in the SPX. Let's move on. Okay, so this one's a 3. This one is a 1. And here you have a 1, 1, 2, 1. I don't know what FSB means. Let's see. So here's a 1, here's a 3. Okay. Here's a 1. Here's a 3. Here's a 1. 4, 4. There was a 1 in here somewhere. Okay, so see, this guy worked okay. And 1, 2. Okay, so we go maybe a, whoops, no, hold on, there was a 1 over there. Here's your stall indication here. 1, and then 1, 2. Okay. Let's take a look. So here we have a 1. 1. 1, 3, 2. Over in here somewhere, and got a couple of high 1s. Okay. And what we get over here, we got another 1. Okay, and then we got a 1 over here. And then we had a 3. Ooh, 3 is good. Okay, and so we had our staller over here. And 3 saying, hey, boom, let's have a nice down move. And it went down for past the last several days. And then a 1 over here. And right now on the last day, we have an early 4. Remember, early ones are subject to change by the end of the day. So the numbers you see on here from here back are effectively cast in stone. It's the last day that could be early, right? And that one is definitely not cast in stone. All right, so now you have seen what the numbers look like and what things look like in the different time frames and in the different indices. Okay, so I thank you for your time, and get a chance, take andrewscourse.com. By the way, we always give this indicator away for information away for free. We never charge for it. Of course, we're going to give an advantage to people who have taken the Andrews course in that we can give them guidance sometimes as to what we think the indicator is going to come out to be early in the morning. And with the regular group, we may wait a little while till after the end of the day and then post that. So if there was a premium group, so to speak, it would be the people who are course members, the Andrews course, and we always recommend that you use regular indicators, things that you trust, in conjunction with this. And this is the way I trade with it. So this will give me a 1 or 2 or 3 or whatever, and which effectively gives me some kind of a heads up of saying, hey, watch out for something going in this direction or something going in that direction, and that is very helpful. So give you an example over here where I had here I had an early 2, and here I had the 3 down here. I also had other indications coming in saying, hey, this is a wonderful time to get in there and draw your lines. Now, in this case here, I can tell you very specifically that on Friday, which was this bar here, we had I remember having a conversation with my buddy Matthew about what was going on in the NASDAQ and how on Friday we had an entry that was just mice nuts in the way of risk. And one of the things we look at is risk, because this stuff is risky, and we like to keep that risk down. And so on Friday, we noticed that in the NASDAQ, for example, there was a pattern that's absolutely classic, textbook Andrews, and it gave us a great opportunity to sell, and so to go short. And as you can see, if this was it on Friday, well, gee, there's been a lot, it hasn't even done its royal dump yet. Okay, so if it is going to go down a lot, then it still has a whole lot more room and a whole lot more time, and the risk is effectively the high over here on this day here, which isn't bad. Anyway, so I thank you for your time and see you next time.